Are you looking to retire with one simple, consistent, and reliable strategy? Well, look no further than selling put options. With just this one strategy, you can retire and bring in a full time income, $10,000 per month or more if you scale your portfolio using this strategy. So, check it out on the screen right now. You can see here, this is how a short put option looks like. And I'm going to give you the full breakdown of how I would use selling put options to create income, which stocks I'm going to pick in the simple formula that I have used for the last 10 years. Because look, check it out. If you want to retire early or you want to just create enough income to live on, you need a safe and passive strategy that's reliable and consistent. And selling put options right here, as you can see, when you sell a put option here with the strike price, you have collected some income. So the break even of a stock is lower. You're up here, you've created income, and you've capped your upside. And I'll talk about why capping your upside is really not that bad. And in this video, I'm going to show you exactly how you can retire using this simple strategy and pick the right strike price. So this is for people who don't want to take huge risk, but still want to make consistent income from option trading and very little management. That is the key, because the less you manage a position, the better. Because oftentimes traders make too many decisions and it ends up losing money. You don't need to make a lot of decisions to make a good income. So this literally only takes 1 to 2 hours per week, and I'm honestly not exaggerating. My coaching sessions are Monday and Wednesday for 45 minutes. So that means that anyone can literally go and just trade 30 minutes Monday or whatever day of the week, 2 times a week, and that is all you need to really managing your portfolio. And I know what you're probably thinking about. This sounds too good to be true. Well, I've been using this strategy for a very long time, in fact, over a decade. You can see here on my portfolio, which is at $3.5 million. I had just several options that have expired recently. These were positions that I opened up in my Discord community. And I said, hey, guys, look, I want to sell puts on these companies because I like them. I would not mind owning them. And I would like to collect income on them if they don't go down. Okay. If they do go down, I'm happy to buy them. So you can see right here how I sold some options last week. And essentially, it was on Robinhood. Robinhood had earnings. And already, towards the end of the week, I had already made $1,230, as well as PayPal. So I was looking to acquire shares of PayPal. So I ended up selling 59 puts on PayPal, and I made $900. Snapchat's another one. Snapchat has had a lot of volatility. So I ended up selling some put options on Snapchat, made $525. And here's two more positions on XLK. So although these positions are down based on this picture, at actual expiration, they were not down. And I can actually show you what had happened. So if I go to my account, I want to show you how I've been using this easy strategy. So I'm going to go to history right now. And I'm going to show you that XLK, the two positions, ended up expiring out of the money. So essentially, I don't have any obligations. When you sell a put option, you're collecting income. And until expiration, you don't really need to do a whole lot, because the way I sell put options is I only sell put options on stocks that I want to own, that I like, and yeah, I'm happy to get assigned if so. So when I sell a put option, there's very little management that I have to really do. And that's because mainly the person that I work with, the client, the avatar that I'm working with, is someone who wants to retire, someone who has a busy life, someone who may be a business owner or doctor or a lawyer. They don't have time to manage their portfolio. So instead, when we sell a put option, the strategy is that it is such a good option that we have sold with a good strike price that we don't need to do anything in the intermittent time until expiration. So you can see here how, based on the picture I was just showing you, PayPal, Snap, Hood, but you can also see here that two of the options, XLK, expired. You can actually see as well how much I collected on XLK. I ended up selling 215 strike price and 212 and a half sell puts. And yeah, this brought in $1,760 on May 1st, and this was expiring on May 2nd. So this is like a really short-term play, and I put it out in the Discord community. It's not something I can put out on YouTube because it takes time to edit these videos. Plus, my community members get all my live picks. And essentially, I sold a very short-term option. 24 hours, collected $1,760, and then I collected $500, and then these two options expired. So yeah, you can see more of the positions in my portfolio. I have some more expiring in the future. So on May 9th, I have Kraft Heinz expiring. It's already made 52%. You can see some other positions in the portfolio, but I've highlighted in purple the sell put positions I have, as well as Palantir. So Palantir, guys, you already know we making money hand over fist. We're making money hand over fist, guys. Bicep over tricep. I mean, Palantir is just great. Palantir is amazing. It's been really good, consistent income, and that's really by just selling puts. Well, yeah, if you're thinking about this strategy, is it too good to be true? It kind of is too good to be true because this is really the main strategy that I've been using. And there's a reason why it's the most used strategy in my 3.5 million plus dollar portfolio. So, there is some drawbacks, of course, that you should be aware of, which I'll go over in just a second. But those drawbacks are very minor and they're also very low risk. So let's just get into it. So here's how it works. There's two types of option contracts. There's calls, the buyer of the contract wants the stock to go up, of course. And then there's puts. The buyer of the contract wants the stock to go down. However, this is for buying a call and buying a put. Let's flip it on the other side around. If you are selling calls, well, the seller wants the stock to stay below the price that they sold, right? And the strategy that we're talking about today, the one, the only, the strategy that will make you retire, you will get to retirement fast, is selling put options. And the seller just wants the stock to stay above a certain strike price, a certain point, okay? So let's talk about this. We're just going to focus on being this guy right here, okay? We're not going to focus on any of these other strategies. We're going to focus on just selling a put option. And we're going to focus on being this profitable guy, this guy who wants to retire. And here's something that nobody really talks about. Even if the stock goes below a certain point, in the case of a put option, it's not even necessarily a bad thing for the seller. So again, this is actually something that I refer to as a non-losing strategy. I've been talking about this for over 5 years now. A non-losing strategy is it goes up, great, you made money. It goes sideways, great, you made money. It goes down, you have collected premium, you've gotten a sign on stock that you want. So great, you're making money. So here's an example. Let's say that you sell a $400 put option on Microsoft. If the stock goes below 400, say to 390, then you will be forced to buy 100 shares at 400. But that's completely okay because now you have 100 shares and essentially you've gotten paid to enter the stock and you've collected premium. Let's say the premium is $5. Your actual break even is $3.95. Even if the stock goes to $3.90 or so or even below, your average cost will be $3.95. However, imagine this. Imagine Microsoft was at $420 and when you sold the $400 put option, your break even is $3.95, right? But the person who is owning Microsoft shares at $420, they have lost a ton of money. So you can see here how selling a put option is really safe compared to a stock investor. So if you think about it, let's say that you wanted to buy Microsoft at $400 anyways, it's at $420. So if you wanted to buy at $400 anyways, then this is a really huge winning scenario for you. Let's get into more of the pros and cons to only selling put options because I need you to really understand this on a deeper level. I see a lot of YouTube videos where people talk about how a new crazy trading strategy, and oftentimes they miss the risk management, the management of opening the position, managing it and closing that position for a profit, because there's also downsides. You need to be aware that if the market crashes, then your stock can go significantly below your strike price. So we need to talk about the risk and the reward. As you can see here, this is very important. There's always a risk and reward scale. Okay, so how much are you making and how much are you risking? Well, with this strategy, there is a lot more reward than risk, which is the good news. So your job is pretty much 90% done already. If you want more rewards, you're going to have to take more risk usually. However, with selling put options, because you want to own the stock, you can really say there really isn't too much risk besides the stock crashing. So the only risk is you picking the wrong stock. The strategy itself is a bulletproof strategy. And if you want to reduce your chances of getting assigned on this strategy, and let's say that you like the stock, but you're not super confident, then all you really have to do to reduce your risk or take less risk is you really have to settle on less reward, go a little bit lower on the delta, go a little bit lower and away from the current stock price. And by going lower, you're going to get a little bit less premium, but you're going to be safer from getting signed. So for example, let's look at Palantir. Palantir has been a stock that I have been making a lot of money on. I'm currently up over $250,000 on Palantir, and I've been covering it for a while. And let's talk about selling a put option as an example. Palantir has earnings, and I am pretty concerned over earnings. And let's say that, I think Palantir is a good long-term stock, which for me, 100%, I believe Palantir is a good stock. But let's say that you think Palantir is a good stock, okay? You are uncertain in the short term if the stock will really go up a lot. There's earnings, so you really want to be conservative and safe. So what you'll do is you'll just sell a put option that's out of the money. And because it can be risky, for example, if you sell a 120 put option on Palantir right now, you can see here how the premium is massive. It's really huge. Now, the reason why it's huge is because there is significant risk. Like if I expand this option, you'll see it's 149%. implied volatility. That's freaking high. That's like really, really high, right? And essentially that's because, there's a high chance that Palantir can pull down after earnings. It's not a cheap stock by no means. So you can see here how you're selling it as a put option, you're collecting 670, and you have a break even here of 113. Now, you get the break even price by taking the strike price of 120, subtracting the premium of 670, and that's your break even. So if you want to buy the stock, it'd be much better to create income and sell a put option, and you get a break even here of 113, which is less than the cost of Palantir right now, which is 124. Now you can also go lower, which I probably would suggest right now, given that with earnings and lots of volatility, the stock is volatile for a reason, so it can pull back a lot. So instead, you might want to go a lot lower. But that's just an example, and I see a lot of YouTube videos where people talk about this new crazy trading strategy that can make you 100% profit, or multiply your money real quick, or become a millionaire with 50 bucks and quit your job and all that type of clickbait stuff. But no one really talks about the risks, the downside, especially if you're someone who is looking to retire. You can't afford to lose money. That's my position. I'm not really looking to create 30% per month return. Okay, that's kind of nonsense in my opinion. You can't really generate that much income in a short amount of time without taking on massive risk. So you really want to understand, what risk am I taking and is it worth it? In the case of selling puts, I usually go for 30 delta or lower. If you go lower, you're even safer. And here's the thing with selling puts. In my opinion, it has the perfect balance of risk and reward. Your risk is that you may get assigned. Your reward is the premium that you collect. You can also customize how much you risk and reward, and it all depends on many factors. So here's some of the factors that it depends on. I'm going to go back here, and I'm going to expand the 110 put option here for Palantir. So it depends a lot on delta. The lower the delta, well, basically the lower the premium, but the safer. So you can see here, the delta is 0.22, and if I go lower to say the 105 here, the delta is only 0.16. So it's a lower delta than 0.22. It's 6.6 lower, which is 6% lower, because delta, one of the definitions of delta, is the chances that the option will expire in the money. So because 105 strike price is lower than 110, there's a smaller chance of getting assigned, because if the stock pulls back, obviously it can pull back to 110, but it's less likely to move down to 105. 105 is lower than 110. So it's very simple and linear here. And you can see here that the premium is also going to be less. So there is a linear relationship. Going from 110 to 105 also brings down the premium from 330 to just 220. And the way to calculate your return here, or your reward, is 220 divided by, what you're putting up. The 105 here is going to be $10,500. So it's roughly 200 bucks divided by 10,000, which is a 2% return in a week, in 5 days. And I would categorize this as freaking phenomenal, because 2% in a week is 8% a month, which is 96% a year. I mean, you'd be silly to not think that this is a massive, huge return. And again, I'm using this example on Palantir. You can do this on many different stocks. It doesn't have to be Palantir. It can be any stock that you wish, any stock that you currently hold. You can utilize the same thought process, the same strategy at any point in time. And you can sell a put option for, if you want weekly income, you can go for weekly income. Monthly, you can go for monthly income. Typically, in my Discord community, I am doing monthly expirations. I am going for the traditional Friday expiration. So with that being said, I want to go into the pros and cons a little bit further, because I think it's going to help you understand, how to manage this strategy, what's good about this strategy and what's bad about this strategy, and when would you not want to use this strategy. Because even though this is a super safe strategy, you can imagine a market crash is not going to be very good. So let's talk about the pros. The pros of this strategy is it's very safe, it's passive, it's consistent income if you do it correctly. Usually it's very little management. There's literally nothing you have to do. Like, you can be a busy doctor, you can be a cardiac surgeon. You open this position Monday, and then you're busy in surgeries, or you're coding and you're an engineer. And yeah, you're just busy. You don't have to do much management. That's the benefit of this strategy. In my opinion, and the way I use this strategy on high quality companies that I want to own, there really is no outcome that is completely losing. There is no losing outcome unless you're doing something very risky, like trading on margin. Now, let's talk about the cons of the strategy. So it's not so good in a market correction or a market crash. So Recently, there's been a lot of volatility in 2025, and leading up into May, there was just very choppy market. And if you're selling put options, you get assigned, you don't have any more cash. Well, you're going to have to sit put and be patient, which is very difficult for a lot of people. But as we've seen in 2025, the markets recover, and they do so every single time. So if you sell in a market crash, bad. Okay, so if the stock shoots up a lot and you don't already own the stock, by the way, with selling puts, you may have some FOMO, or fear of missing out. You may say to yourself, well, oh man, I really wish that I would have, owned the stock. I would have made more money, and that is true. So there is an opportunity cost, and I put here on the screen in quotations, opportunity cost, which means that you would have made more money owning the stock. So don't get me wrong, like this is a great retirement strategy, but if you're in a bull market, the best strategy is still just owning stocks. So now that we're done talking about the theory, let's actually go through the concrete steps. First of all, you have to create a watch list. So a watch list is just a list of stocks that you're watching or paying close attention to. I have a list of 30 stocks that I follow. Again, I've already talked about it. First link in the description is my Discord community, but essentially I have a whole list of stocks and I follow the same stocks. I don't go into new stocks. I'm not doing like some always searching for something new, something shiny, that's shiny object syndrome. I'm not looking left and right. I got 30 stocks I focus on, and I have this watch list that I am trading consistently. So you can see some of the stocks in my watch list. Got Walmart, Apple, XLC, XLY, Amazon, Palantir, Kraft Heinz, Snap, SoFi. Now this is a lot of my portfolio. I also have more picks that I put out as well for accounts that I want to scale up a little bit faster. Because I have lots of ideas, but I only have so much capital. Yeah, I have a big portfolio, but I only have so much capital to put out. So this is just an example, by the way. You can use selling puts on a number of stocks, whether it's growth or value stocks. I advocate for a combination of both growth and value. Of course, I do one-on-one coaching because everyone's portfolio and risk level is going to be different. So I have some students and clients that I work with one-on-one, and when I message them back and forth, right, they're telling me, hey, I have a smaller portfolio that I want to grow more aggressively, and I can afford to lose this money because I just need to get to my end goal faster. Okay, that portfolio is going to look a little bit different in terms of strategies, in terms of the stocks that we pick, versus someone who is, 60 years old and, they're very close to retiring or they've already retired, and now, they already have money. They're just looking to preserve wealth and to generate income. They already have, assets, whether it's real estate or businesses or, things that they've built, and now they want something safer. So that type of person's portfolio is going to be very different. So it really depends on the portfolio size. Like how much money do you have to potentially buy hundreds of shares of stocks? So if you have a smaller portfolio, I'm going to, look at American Airlines. I'm going to look at HIMSS. If you have more of the medium portfolio, we're going to look at something like a Palantir. If we have a big portfolio, then we're going to do maybe some Costco, some Adobe, and things along those nature that are more expensive. Meta is another example. It's also really important to understand your risk tolerance. How much risk can you take before you really get emotional or attached to your trades? This is incredibly important, and to be honest, it requires coaching. And when I say coaching, I sell coaching. We get it, right? But I say coaching is important because I'm a believer in it myself. I have many coaches. And oftentimes when we're doing something new, or even if we're pretty good at something, it still benefits us to have someone else ask us a question. Am I taking too much risk? Am I comfortable with the volatility in my portfolio? And asking these questions you can do yourself for sure, but having the help, the guidance, the support is also really important, right? So that's something that I want you to understand is whatever your decision, if you do it yourself, try to understand your own risk tolerance. And of course, that takes time and experience. And then third is like, what is your trading goal? Like, are you looking to retire now or you have a runway of 5 years? Because I was working with a student recently. I'll call a friend as well because I become friends with many of them. All my one-on-one students, I started to, we start becoming friends when we talk a lot. But so this gentleman has $300,000. He's in engineering. He's doing pretty well, making six figures, and he wants to get to the $1 million mark. So he's going to be a little bit more aggressive, and he's a little bit on the younger side. He's 40, so 40 is pretty young. Lots of time and he wants to actually move to Tunisia. So he wants to move to North Africa. It's a lot cheaper, right? You guys know whatever country you're from, or if you're American, if you move to like a different country, it's much easier to like live there. I mean, I'm in Poland right now. I'm in Warsaw, and yeah, I'm like in a nice apartment and everything, and it's not that expensive. So you got to understand your trading goals. How much money do you want to make per month? And I think with selling put options, a majority of people that have a six-figure portfolio can start generating five figures a month. So you can make consistently $10,000 per month with this strategy. That you can legit make $10,000 per month. And that is amazing because all of a sudden you're no longer needing like a job, you're no longer really dependent or tied down to one location, since this is an easy strategy to manage. I mean, you open some sell puts, you collect the premium, and the money is in your account right now. Although it's the positions in your account value won't change, your cash has changed. So, I mean, you can literally take the money, buy a plane ticket, and go to a country. I mean, Colombia, Thailand. I have some students in Vietnam, all Americans, right? But they're traveling, they're going places because when you have online income and flexibility, why not? Why not consider leaving, America for some time at least and exploring? So, what I like about selling put options is you're able to be flexible with the amount of money that you want to make and the risk that you're willing to take. So all of these factors really influence the kind of companies that you are going to be selling puts on. Now, let's talk about technical analysis and how technical analysis really works on selling put options. For me, you see a pattern like this where the stock really just drops down a lot. That's a really good time to sell a put option. I also recommend that if you really want to learn the perfect timing of selling put options and you actually want to watch a full breakdown of a new course that I recently made on technical analysis, selling put options, and a full guide, all the fundamentals. I'm going to have a second link in the description to an ebook that I made. I haven't really told anyone, but if you purchase the ebook, you actually get a discount for, it's pretty cheap. It's the price of lunch, essentially, for the course that I built recently. And it talks about selling puts. It talks about technical analysis. This video is getting long, so I'm going to skip over technical analysis a bit. But to sum it all up, to give you the free value, right? Because I don't need the money. I like making money. I have a huge team and they have families, but I don't really need the money. So I want to give you the free advice as well. Here's the free advice breakdown, okay? Sell puts when the Bollinger Band is low. That means that the stock is essentially near its bottom. If the RSI is lower as well, that means that the stock has sold off a lot. So there's two data points right there. And the third one is if it's below its moving average. These three data points together give you a very good indication that the stock is cheap and it's a good time to sell put options. But yeah, if you want a full technical analysis course, all of my strategies and everything, then you can check out the second link in the description. It's an ebook that's written, and then once you purchase the ebook, you get a discount. It's kind of hidden because I want to reward those that are action takers. So once they take action, yeah, they get a huge discount. So yeah, I used to work on Wall Street. You guys already know that. Here's my badge from Goldman Sachs. And I just wanted to say that although I worked at Goldman Sachs and I'll have all this experience, I truly believe that this strategy is just so easy that you don't have to have any background. You can be a complete beginner and still really use this strategy. And again, just to break it down, you want to look for support and resistance. That's really, really important. Moving average, I discussed. Bollinger Band at the bottom, and RSI as well. The lower it is, the better. All right, with the technical analysis out of the way, let's talk about picking your stock, your strike price, and your expiration date. These are very important factors. So now that you have a watch list, hopefully that you have, at least 10 to 20 stocks in your watch list. Now you can start picking the exact science, So the exact ingredients, right? The expiration dates, the strike price, stuff like that. And I want to say that's not an exact science. And that's why, again, going back to coaching, I usually ask folks like, hey, what is your personal goals? How do you feel about this? And I walk them through and I hold their hand through the journey because there's no exact answer. Like you can sell puts a little bit more aggressive depending on your goal. Like, do you want to get assigned? Do you really like the stock? So there's just really a whole lot of factors here that you want to consider. If you want to keep leveling up your option trading, make sure to check out more videos that I have created for you to master and improve your option trading.